Semiconductor stocks continue to be volatile as traders eye COVID factory closures in China, potentially slowing demand for tech hardware in the United States. So what's the trade here? Vivek Arya is an analyst at Bank of America and joins us now. Vivek, good to see you here this morning. Has chip demand peaked?
I think it's a good question, but it depends on which end market we are talking about. So in certain areas tied to cloud computing, tied to AI, tied to enterprise demand, certain parts of automotive and industrial markets, we think the demand is very strong, very resilient. Pricing power is very strong. But there are parts of the consumer market which are tied to smartphones or PCs, where you do have the exposure to the consumer who is being impacted by just the perception around the conflicts in Europe or just rising inflation. So we think that there is a disparity where parts of the market are very strong, tied to enterprise and cloud, but parts of the market tied to consumer are somewhat decelerating at the margins.
Within that backdrop, Vivek, you're constructive or which I would take as mildly bullish on something called Mango. Explain that to us.
Sure. So I know it's a very interesting term, but the reason we came up with that term was really to help investors focus on the names that they should start re-engaging with as as investors start to go and look at the semiconductor stocks. The industry is facing a wall of worries, whether it's in terms of the global demand picture, rising capacity that's coming into the industry, whether it's all the threat of geopolitics or conflict and inflation, as I mentioned. So our purpose with this acronym was to focus investors on the names where we think the demand is very resilient, the supply chain is being very disciplined and supportive, and where pricing power is strong and management execution. So those names specifically are Marvell, Nvidia, Broadcom, which is AVGO, AMD, Analog Devices, Global Foundries, and On Semiconductor. And the key is that they are exposed to specifically those parts of the market, cloud, enterprise, EV infrastructure, the reshoring demand, where we think both the demand and the supply side is very supportive.
So it's almost sort of mango, if you will, Vivek. It's Julie here. I wanted to ask a little bit more about supply chain, because there's been a lot of discussion recently about bringing some of the supply chain, some of the manufacturing capacity here to the United States. Of course, Intel has been front and center in that discussion. But as you write in a recent note, it's not going to be so easy. Yes, that aside, it's very difficult to sort of disentangle the U.S. chip supply chain from Asia. Talk to us about why.
Yeah, absolutely. It has taken, close to 10 to 20 years for this supply chain to be put in this shape, where you have these different centers of excellence, right? You have companies in Japan that are producing the raw wafers. Then you have the big foundries in Taiwan that are doing a lot of the leading edge manufacturing. Then you have other parts of the supply chain tied to assembly and testing that are in other parts of Asia. Then you have over half of the chips that are being designed in US and Europe. So that's why it is a chain. And trying to duplicate this chain where the big designers and suppliers, are scattered all over, and the customers are scattered all over, I think is a very long and expensive process. And it's just going to take a lot of IP and expertise. So I don't think there is a silver bullet here. I mean, the goal is worthwhile, right? There is no doubting that the goal is worthwhile, and it has to be done, because depending just on China and Taiwan for leading edge, there's a lot of risk associated with it. I think the path towards getting there, and the time it takes to get there, it's probably a 3 to 5 year journey, assuming it is funded as soon as possible, which I think is also right. Every day there is a debate about the funding of all these CHIPS Acts and whatnot, but so far we have not actually seen anything being funded.
And Vivek, another interesting aspect of all of this, looking further into the future, there's all this talk about how Russia and Ukraine have affected the supply chain, the supply of neon, et cetera. But to your point, the actual manufacturing of the chips happening in China and in Taiwan, and the conflict in Russia-Ukraine perhaps raising some concerns about an eventual China-Taiwan conflict as well. What would the implications for the supply chain be if that heated up?
Yeah, it's certainly on top of mind for many semiconductor and technology investors. Taiwan is a very, very key part of the supply chain, right? China is a very key part of the supply chain because a lot of the assembly and testing services are done there and in other parts of Asia. So any conflict, any friction in that region, we think sets the industry back in a very big way, that there is no way to sugarcoat, right, or try to play down the effect of anything, like that happening. But having said that, the reality is that the East and the West have learned to live, right, with this kind of mutual interdependency and this symbiosis. The designers are in the West, a lot of the manufacturing is in the East, and both need each other equally. And I think that actually provides a very fertile ground for the kind of support and cooperation. But still, we think that there is going to be greater build out of fabs, greater levels of reshoring, which is why some of the names that are in the equipment space are well positioned, right, for that. There's going to be greater level of investments in names such as an Intel or a Global Foundries. So there are going to be relative right winners over time as the supply chain starts to get reshored here in US and in Europe. But as I mentioned, it's going to take a long time. And if there were any increase or escalation in conflict in Asia, I think that's going to be a very, very tough scenario for semis to handle.
Vivek, before I let you go, speaking of support, Jensen Huang, the CEO of Nvidia, seemed to lend his support to Intel's foundry business. Now, do you see some deal between Intel and Nvidia coming to fruition anytime soon?
I don't. For the reason that, well, first of all, we are not privy to all the discussions that might be happening in the background. So I have to start by saying that. But from what is, known publicly, if I look at the kind of products that Nvidia, makes, which are graphics chips and accelerators, similar products at Intel are actually outsourced to TSMC. So it's very hard to see Intel going and manufacturing things that they don't even make themselves for their own application anytime soon. Secondly, Intel's technology is probably a few years behind TSMC's technology. And what we saw early this year is Nvidia having to move from the second bigger foundry, which is Samsung, over to TSMC because Samsung apparently did not have the right support or the right yields. So for an unproven foundry like Intel to go and work with Nvidia, we don't think it's going to happen for the next 3 years based on what we know publicly.
Vivek Arya, Bank of America analyst. Always good to get some time with you. We'll talk to you soon.
Thanks very much.